Okay, slide. Our live? Okay. Perfect. Amazing. Okay, welcome everyone to our last panel of the Finance Day at the Digital Innovation Pavilion. Welcome to those who made it, all those who are at the end of the day. We have a very interesting lineup today, pretty unexpected a little bit. So, my name is Alexis Chandran. I'm CEO and co-founder of Evercity. We're also co-hosts of this wonderful innovation pavilion. And today we're going to talk about digital carbon finance trends and updates with esteemed speakers, really the leaders of this space for already many years. So, Anirban Chatterjee from Bureau Veritas, Raphael Dury from Elcat.io, and Jonathan Radcliffe from HBAR Foundation. So let us maybe start with a round of short introductions and tell the audience and the live stream viewers on what everyone is doing. So I'll pass the mic to everyone.
Thank you, Alexi, for the invitation. And I think Digital Innovation Pavilion, I am seeing it for last three talks, are also playing a very pivotal role. Although at its own pace and kind of ecosystem, but we are seeing a lot of digital innovation around, and it's very important for us to understand what are the catalytic nature of the digital innovation, which can really unlock something very accelerated journey for the carbon market as well as sustainable finance. And I think that role you all are playing very holistically. And about me, I'm Anirban Chatterjee, based in Mumbai, uh, heading the sustainability for South Asia market for Bureau Veritas. And Bureau Veritas is a global leader in testing, inspection, and survey certification. A 200-year young company, bringing credibility to claim, and also very sustainable finance and carbon market. We are one of the oldest BBB. So happy to chat, Alexi, Rafael, and Jonathan. Sorry, about some of the trends and what is your insights, and maybe share some perspective as well. Both.
Thank you. My name is Raphael Dury. I'm in charge of Elcat.io, which is the digital division of Elcat, which was established in 2009, not 200 years ago. Definitely. But we are working definitely to try to unlock different self-correcting mechanism that we see on the market. And thank you for the invitation from the Digital Innovation Pavilion to actually share some of the learnings that we made, and also some of the road ahead that we have in order to unlock the capital that is needed for the projects to blossom and get the finance where it makes a need.
Thank you very much. So actually, it's a great pleasure to be on this panel. I really appreciate the invitation. And the Digital Innovation Pavilion is doing some really amazing work this COP, and I hope that you will have an opportunity in future COPs to be part of your initiatives as well. So my name is Jonathan Rakoff. I work with the HBAR Foundation Sustainable Impact Fund. We are essentially the venture investing arm of the Hedera DLT network, but we're very focused at the Sustainable Impact Fund on investing in technologies that will accelerate the voluntary carbon market and make ESG reporting in the climate and environmental space more credible and trustworthy. A bit about me: I'm a lawyer by training. My role is the head of global policy, and I worked previously in the Obama White House and EPA. I did my best to achieve climate outcomes using the traditional instrumentalities of government, but felt that wasn't working, and found my way to climate tech investing, where actually we're doing a lot more exciting work than I think folks in government can do imagine. Great, thank you. Wonderful to have you all on this panel. So since our topic is twofold, trends and updates, let's maybe start with trends.
And so I'll kindly ask, each of you to maybe name like 2 or 3 trends in the digital urban finance that you think are have been the most important during the last year, and maybe those that will be continuing like over the next year. So 2 or 3 trends that the most excites you the most. So please maybe start again on that.
Thank you, Alexi. I think we are in an incremental journey for digitalization every year. Every year we are seeing something new. And 2023 was probably a very pivotal year when we really experienced AI at mass, right? So, from an artificial intelligence adoption point of view, now GNAI is transforming the entire activity what we do from our household activity, how we live our life to how we do our work and how we communicate. So that sets apart. That has also a positive impact on the how we are managing and measuring our carbon footprints and disclosing it. Maybe getting validated. So one very major trend which has really got prominence, that is how we can together see that the carbon footprint or reporting or the disclosure side of it can be automated with the help of kind of AI, and that really helps. There are many startups and ecosystem players who have brought in tools which you upload the reports for last 10 years, and then they get a meaningful report as far as any requirement of any disclosure norms. So that is one. Secondly, I'm very much personally excited in the wake of insurance sector, especially in the kind of carbon finance, and then insurance sector over a kind of period of 1 year when we are seeing a lot of natural calamities are facing the music, in terms of what exactly the claims are gone up in terms of natural. So they are also now going to invest in guarantees of origination in terms of the carbon projects, so that there are a lot of underwriting what they're doing now for related to carbon investment, and that is a and the insurance sector to large extent last 3 4 years have also digitized their underwriting, and I'm going to see that trend coming over to the carbon financing activity. It was interesting in the World Bank Pavilion the other day. I was, kind of there and then speaking to few professionals in Riga. They are equally, kind of interested to look at, how digitization can impact the TMRV, and then their underwriting process gets used for that. So I think in 2025, this is a trend which is really going to take mainstream, and insurance sector is going to come and for climate change underwriting and climate change related.
Yeah, just a small comment. Thanks for sharing these very interesting trends. And maybe one quick question. As a representative of an auditing firm, will you be ready to utilize blockchain to verify assets and various actions within the carbon space and broader climate finance? Are you ready to do that like today?
Yeah, actually, we were ready yesterday. The challenge was the platform where, when it was conceptualized and designed, it was never thought the verifier side of the workflow. And then your stakeholders were the reporters or whoever are the customers. So verification was looked at as the last moment kind of tick box for many of the kind of disclosing order. It was not kind of taken seriously until and unless we have seen the trend of regulatory oversight has increased. Now there is a greater emphasis on regulation. When it comes to carbon market, last 5 to 7 years we have only seen the voluntary carbon market prevails in the market. So we have actually not seen that regulatory oversight of the carbon market, which probably expected in the wake of Article 6 and others. So coming back to your question on digitization of verification part, as a verifier, it helps to bring efficiency to the process. It helps to remove the bottlenecks when it comes to some of the methodology digitalization, as well as looking at some of our efforts which we put towards verification, how we can optimize the same. So we are always open. In fact, at Innovatus, we are looking to develop our own APIs, because what we are anticipating, there will be platforms across, and many of these low-hanging fruits when it comes to ISO 14064 baseline GHG verification now, these will become an off-the-shelf product. Customer will come, they choose their service, there will be an API which can get integrated, and there will be an kind of trigger to the auditor to verify their data. There will be a certificate template which can be auto-generated, and so on and so forth. So we are ready. In fact, we are investing, and we are ready to partner also with the ecosystem to make that happen in a big way.
Perfect. That's a very interesting insight. So Rafael, maybe you could also share your thoughts on the trends, but maybe before that, as the other side, that as oftentimes submitting documents for verification, maybe you can a bit elaborate on what Anirban is.
Sure, and thank you for this window to the other side of the process of registering a project. And I would say that for me, the trend that I see the most impacting the development of the projects and their registration and all the validation or monitoring is centered around two things: data and standardization. We are in an ecosystem where we got many different stakeholders that have to perform collective duties in order to conform to the different requirements of either the methodology or the standards. And to that point, I see very strong progress, because even yesterday we had the Adera forum where the CEO of Vera was mentioning that they are actively engaging towards the common standards to make sure that they can speak the same language, so that other actors can also consume the information that is extracted in a machine readable way. So that I think is the biggest impacting action that can enable this market to be digitalized in a way that can involve all the different stakeholders. And in that optic, there is also the development of digital monitoring, reporting, and verification. That is, for me, what is making the biggest progress in terms of making sure the information of the projects can be channeled all the way into systems that can consume them and make them after that auditable, not only by the verifier but also by the standard, and then all the other stakeholders, such as for instance the catalyst for investment, which is insurance. And that can lead to innovations such as what every city is building with carbon forwards, but also the formation of digital green bonds that have the opportunity to unlock this capital that is much needed to make the project happen in a situation where the current situation of registering a project and seeing issuance is a patient capital allocation that needs to have some kind of grace period in order to be sustainable from a financial point of view. So I think these are the trends that I want to see blossoming and evolving in this market, to make sure that we all speak the same language, and whether it's from the demand side or the supply side, we can have a convergence of activities that are translated into a language that can enable this market to scale.
Let's see. Trends. Well, I suppose since I'm the lawyer on the panel, I'll speak just a bit to the electoral outcome in the U.S. So President Trump, former President Trump, will now have a second term, and the conventional wisdom is that will make the U.S. somewhat more friendly to blockchain applications. The regulatory risk associated with those innovations has arguably slowed the pace of adoption. As Alexa said, we're excited to see the carbon standards inching towards digitization. We're very optimistic and hopeful and excited that the great potential of this technology of blockchain and digital MRV will begin to be realized at a much greater pace. With the change in the regulatory posture in the U.S., there may be some acceleration there. On the flip side, it's certainly the case that at least the U.S. domestic outlook for climate action and investment is likely to be diminished in certainly in the near term. I think what people probably overestimate is the speed at which any administration, given the constraints of the APA, can unwind the work that's already been done. It's certainly possible to change the course of climate action in the U.S. domestic context, but it will require lengthy activity. There'll be legal challenges, and what you can't do is change the influence of the non-U.S. federal rules that are going to function as demand drivers. And so, carbon finance, whether it is digital or otherwise, is driven by market factors. Companies want to take action. Their customers demand action. Their employees demand action. They see action as sort of a competitive advantage. But you also tend to need the threat of legal enforcement. And right now in the EU, you're seeing with CSRD and many other components of the EU Green Deal, you're seeing a degree of new emergent compliance requirements that will capture most of the companies that, for example, the U.S. SEC would have captured. In California, you have the trio of carbon accounting and carbon market mostly disclosure rules will again capture, because of the size of California's economy, will capture a great number of the companies again that would have been captured by U.S. federal action. So, what this does for us is provide us a confidence that the market will continue to need to turn to the kinds of digital providers and carbon market providers that are on this panel, to meet the demands of both aspirational work on the part of corporates as well as sort of compliance market requirements.
Well, that was also super insightful. I think that's perspective, the regulatory perspective, is super important for both carbon finance and, of course, it's digital application. And so maybe just a quick follow-up question to Jonathan. Last time Trump became president, we've seen like a movement from the different states and organizations, which was called like "We're Still In." When Trump withdrew from the Paris Agreement, then there was this "We Are Still In" movement, and I think we were in Bonn, right? That was Fiji, in Bonn, where there was like a separate U.S. pavilion, like a private sector pavilion next to COP, showing like the leadership and additional commitments. So I know that you also very well know the political situation. So do you think there will be something like that? Do you think we're gonna see it? We're still in two, or what would be the reaction of the other part of the society and the business? What could potentially happen?
Well, Alexi, I would be very, very foolish to answer that question with any prediction. It's just, however many we measure the election in days, and so I think the truth is, we'll all see. I guess what I would say is, when President Trump was elected in 2016, the Democratic Party and the political left, it was stunning in a way that I don't think we can claim it was stunning now. It was a surprise, and that created a desire to very vocally resist. And it remains to be seen whether we'll see a similar phenomenon this time around. Given like it or not, the election wasn't close, and so I think that what I take to be more likely is, I don't want to in any way suggest that there aren't advantages to those sorts of, sort of subnational efforts to signal commitment and so forth. But I think, so probably there would be some of that, but also, there's going to be a dialogue on the left, and a sort of deliberative process to determine whether those sorts of actions are the most sensible, or whether there shouldn't be a shift of attention, whether it's the private sector, to support for international or state level regulatory regimes. Remains to be seen. That's sort of a wishy-washy answer, but candidly, anything more would be super perilous because it remains to be seen.
Have a quick comment on what Jonathan mentioned. President Trump, if you look at, I think he's a businessman, right? Ultimately, after IRA implementation, there are a lot of strain on the solar supply chain and a lot of investment which has also come in the US. So, if we wear the businessman hat all the way, I don't think there would be. And we have seen the US sector in this COP is very active and a lot of commitment. The negotiators are supporting the NCQAG, which was kind of initially that was estimated that they may not take part after the election, but they are doing it. Plus, on the carbon market, I think there are US investors have a sizable business chance which comes to invest in emerging markets in the carbon finance also. So I think this trend is going to continue. Yeah, certain policy level at a very department level or a bureaucracy level, some changes will definitely come. But from a business benefit, now we are looking at climate change as a climate business, right? And we are when it is a business of business, everyone is in a Trump will definitely win.
I think that's exactly right. And I would just also add that while the United States of America is incredibly important to the global climate effort, we also don't want to overstate its importance. Right? We're dealing with a global problem with contributors at a global scale, and there's certainly an opportunity for the rest of the world to step up and show leadership to the long-term carbon markets, to show what actions they can accomplish with the advantages of digital technologies and perhaps a more friendly regulatory environment. I think it would be a mistake to suggest that really because there's retrenchment on the sort of U.S. sort of level, that suddenly everything grinds to a halt. Right? I mean, the work continues, in a sort of multi-pronged fashion.
All right, I think we can continue a little bit around the geographical trends, international regulatory trends. Since during our previous discussions, last year's here, regulation was definitely a very important topic. I think now, since digital infrastructure, digital tools are becoming like mainstream, so this the regulation and market development and also tech development, they go kind of hand in hand. So maybe you guys can share some other regional perspectives on where digital carbon finance is developing. I can definitely share my experience of talking to representatives from the UAE, and Dubai and Abu Dhabi, and also the region. I can definitely see momentum there that this area is becoming more and more active in terms of climate and carbon finance, and of course, as they have to compete with already established countries and centers of trade and development, they have to come up with innovations, and so they're embracing innovations more and more, and they use blockchain for trading, and they use MRV, and they develop this infrastructure, and they also move on with the regulations as well, overall industry regulations, whether it's digital or carbon for end use. And this region is really growing. So maybe you guys can share something. Maybe Yerban, you can share about India, what's going on there. I heard Brazil just kind of improved their compliance carbon market. And also, I heard that this compliance carbon market would also accept voluntary standards, those that would be approved. So maybe Rafael, you also know some updates from this COP already on where can we see the next big splash of digital and carbon around the globe. So we'll start with Anirban.
Thank you, Alexi. I think there is also an harmonization of the approach taken by the kind of country level carbon market development. So in India, for example, we have a compliance carbon market scheme which is just getting upgraded from the existing energy efficiency scheme of Perform, Achieve and Trade. Plus, there would be a coexistence of the voluntary schemes as well. Only there would be a tweak in terms of the sectoral preferences or sectoral target where there are more weightage has been given. But when it comes to digital of it, Government of India is of course very much open to look at digital where it can bring efficiencies. And NITI Aayog, the government think tank, has already come out with a digital kind of blockchain policy. Although digital currencies are India among the one of the major economies has already come out with CBDC, and there is also kind of linkages going forward for future development of the carbon market linkage with CBDC. India has a foreign jurisdiction, in Gujarat, GIFT City, where international financial center authorities have been already set up, and there are 750 plus listed entities separately, 30 plus banks operating. Only that jurisdiction operates under FDI. Okay, and there's a tax holiday within. I mean, it's not within India, but it's it's a jurisdiction outside India, but sitting in the territory of Indian sovereign. So. Going forward, what is going to happen when the some of the carbon markets large scale projects of are going to get developed? The developer will look forward money routed through some of the instruments so that they get benefit. There are digital platforms, easy to track, having a lot of credibility because it's being backed by government. So the future is good, but only one challenge which is at this point of time probably anticipated is the some of the demand side of it, because ultimately there has to be requirement of a market stability reserve, because while we have a global operational carbon market, let's say under Article 6.4, and there is also a domestic market is available. There are also voluntary market coexistence. I'm just curious actually to see that how the demands for different markets are being created from the same kind of pool of investors or project developers. In order to, there are various ways to kind of overcome that, but I think there are less efforts at this point of time being put. I think that could be one of the challenge to adapt to that.
Thank you. From our perspective, I think the hardest challenge we face is to make a business case out of the projects. And of course, we look at like the demand side and what is shaping their desires to basically de-risk an asset that is complex and comes with like regulations that are sometimes like undefined. We evolve in the voluntary carbon market, so as long as we find like two parties that agree to trade between each other, then we can unroll our projects and capital can flow. Hopefully, this is like the hope that we have with like Article 6.2, where we have two parties that can agree in a mechanism that is still being defined, but as long as like there is acceptance on both sides, then it can happen, and it has been happening. And so, for instance, like seeing the first credits issued from a project in Thailand and being purchased by Switzerland is like a very positive signal in the direction that we hope will channel like investment in the right places. Now, when it comes to voluntary market, when we look at the demand side, we see like we need to apply the self-correcting mechanisms that have been applied to the carbon markets for the past few years. where like obviously there's kind of like the desire to come up with like top quality projects with zero risks. That doesn't really exist. It's like lack of like clarity in terms of like even like carbon frameworks that country needs to apply in order to like bring more validation is the necessary steps that we see in order to go forward. Initiative like MIGA from the World Bank to guarantee somehow a part of the political risk is like positive steps forward, but still we need to find like massive unlock in the systems to make sure that like investors see a huge opportunity to invest in this market. We come from an angle where we believe that like the carbon credits at the moment are very undervalued. In order to really like channel change, you need to have like a better estimation of like the outcomes that are produced, which Article 6.2 can produce. But like voluntary markets are still like driven by, I would say, actors that don't have an interest of like purchasing credits at a high price. So it's kind of like a place where like innovation is also like kind of struggling somehow to answer to this demand because the regulation side is working very slowly, whereas like innovation, especially digital, needs like a lot of iteration in order to prove that they are bringing like a valuable change. And this is where like we need to assess and demonstrate what are like the solutions that we have and try to like channel them as like the killer app that is like bridging like the different needs and demands from both sides and all sides, also the governmental side, to comply to like the climate action that we want to deliver. So I think we have like a kind of like an impatient posture somehow that we want to see like the solutions that we believe from a digital standpoint are very like groundbreaking and brings like a lot of validity. And this moment of like piecing up the partnerships that help to like bridge this goal towards like something that we can demonstrate as like a profound like impact to channel this capital. We see definitely like adoption of like a digital framework for creation of like financial instruments as being like a trend that is like really happening, like not only not yet as much on the green side as it happens on the government like institutional side. So what we need is really to have like great examples where like also there is the delivery of projects that maybe are not 100% perfect, because like sometimes we put expectations that are like a little bit over the board and kind of like restraining ourselves, but like a way to go forward that can be collectively adopted to channel the right funds in the right place.
So I guess a regulatory environment can be enabling in two ways. It can, in an affirmative way, you can have rules that either require or require the adoption of certain digital tools to be tools to be endorsed, to be highlighted as best available control tech. There's a model for that in environmental regs that has existed for 30 years plus. It can also be enabling by silence. Right? If it's the case that the market believes that there will be no adverse regulatory treatment of the tools used to achieve progress or the market itself, that is there's a runway for private action to do what private action can do. But of course, that means that we have to take responsibility for educating the kind of existing actors in the space, like the carbon standards, the regulatory agencies, all the different players, on what these technologies can accomplish, and to convince them that they will not be sort of adversely disrupted, but rather assisted in accomplishing the objectives they have sort of traditionally aimed at. Here, so at the ISRO Foundation Sustainable Impact Fund, we spent quite a bit of time in that latter exercise. not just investing in leaders in the space like Alpha.io, and I'm very optimistic and excited by the work that Alpha is doing. I think if others in the market follow them, we're really off to the races. But Raphael is exactly correct. It needs parallel action to make sure that other players that represent contingencies are on board. And so I give credit to my colleague Wes Geisenberger for just a kind of tireless effort with the carbon standards, DVBs, and regulators to not just educate but really engage in what these tools can accomplish. And look, you can't blame the existing players for not knowing that these are kind of leading edge tools that are being developed as we speak. If you don't really take an active imprint and sort of an active role to lean in and show them, they won't know, and like everyone else, as human nature, will kind of resist change. And so, I guess my perspective is, investment in the companies willing to lead with a sort of parallel effort, to support them with sort of existing ecosystem players, education, adoption, and sort of where necessary, engagement with regulators to either ensure that they make the right rules, or to get some confidence that they're going to just leave the space alone and not enforce themselves.
Well, thank you. I think it was a very insightful deep dive into the pain points of the market, and at a certain point, the discussion become a little bit dramatic even. So, but I want to go deeper into that, and we all know that innovations were there for a while, and we are developing each of us very cool things, and there's some announcements coming up. It's great, but what do you think are the real incentives from your point of view for the off-takers, for the buyers to invest? What are the trends there? What are they saying? Because we are all talking to the buyers, they're off-takers, and they're a governing council, right? We've been trying hard to promote the various wonderful projects we're supporting, and so what are the trends there? Is there a changing narrative apart from the regulation? Are there any other drivers? I can definitely see that some of the big players, like IT companies, they're teaming up to source credits. They're creating new structures. Why do you think they're doing this? Do they want to I also see that they want to learn more about the projects and engage early on, get more data points. This is something that I got from my engagements with players, in New York, for example, during New York Climate Week. Do you think this is true? What is the reality behind it, and what other trends do you see? Let's have a very frank conversation here with everyone.
I think from an investor's point of view, the trends are predominantly looking at how digital is bringing the cost of or if they can make access to capital far-reaching. So if these two, if we look at and pivot our thought around what are the kind of deep dive insights and trade, you will find that every investors are looking at timely kind of return and credible return of the impact what they are looking for, right? And certainly digital platforms and the DMRV, some of the techniques have helped to secure some of these objectives for the kind of investors. But at a large scale, still from a verification point of view, the projects are absolutely not digital, right? So how do we really get a large amount of project developers under the fold of digital ambit? That's very important. In the next couple of years to see. The technologies are available. Only I think it's the issue of the change management. You know, and when the investors really look at the issue of this change management and tackle it probably, I think mentioned about Jonathan mentioned about the capacity building part. Many things will slowly unfold to have towards a greater adoption. Another important perspective is that when you look at a pure project investment, now the higher return of investment are expected in the niche areas where we are also seeing a lot of challenges in terms of the data collection, data availability, even some of the methodological aspects also. And there are credibility linked with it. There are a lot of scrutinies are there. So I think there is also greater kind of ecosystem support needed to make those kind of projects more digital friendly, I would say. So that from an investor point of view, also they see that okay, there is a platform which can integrate with my digital investment portfolio, and then I can get all the project related information in time. And there is also a third party who probably kind of verifying the data at the same time simultaneously when I want. I do not want that, maybe at a defined frequency. It's that when I want. It's verification on the go. So if these type of facilities can emerge, I think there will be a lot of investment friendly approaches will emerge and adoption of digital technology.
Thank you. So your question is about the demand side, right? Like
Inside
this Mr. Repeat, right?
that's their strength,
I mean, like,
feedback.
so many profiles. We don't have enough time to cover all of them, but like, there's been like a lot of new entrants on the market, and what we've seen is definitely like a lot of education needed, and they start to uncover this market, and then they identify them as like being like, oh, actually like it's kind of like a little bit of gaps, a little bit everywhere, and somehow we find also like. Depending on like their journey, like some of them want to make a business case out of it. They want to use them maybe for their own purpose, for like putting climate action at the center of the sustainability agenda. But also in the meantime, if you can make like a kickback out of it, it can work. I remember like in the past, some of the first projects that were like financed by let's say oil and gas company, for instance. We had the expectation somehow they were using it toward their own purpose. And well, it didn't really happen. They actually came up with like very high standards and like very high requirements, and kind of like, oh, wow, these people, about it. Okay, interesting. It's like let's try to do like the best project we can. And when it came up, they actually like traded it and ripped off the benefit and make it as like a business case for them. That was like delivering back for others. But it's like a big shift in the market. It's like now we find out that like not only you need to make a business case, but you need also to make a foolproof case that like is not going to splash back to you when you actually exercise these credits and retire them, and then find out that the community hasn't been involved, or that like the methodology is not secure, and that like the risk is actually like not only on the financial side but also on the reputational damage that you can do. And this is where like data makes like a huge business case for it. That you have like the possibility to verify and quantify really accurately and transparently what has been really happening. And I would take it as like a parallel with like food products. It's like you receive on like supermarket shelves like many different type of products, and you will define which one is the healthiest based on like your acceptance rates. So you would have like a certification that would come for it, whether it's organic or like GMO free, and that's coming through like a compliance process that is like very similar to what we see in the carbon markets. And this is what we are being asked to deliver. And when you look at it, it's somehow for the food product, it's a supply chain issue. And you don't really know much more than like in which country the product has been sold, or it has been certified. And for the carbon markets, this is the same challenge that we have to actually bring the supply chain of the project in like an auditable way that can bring reassurance that like what you're purchasing is actually substantiated by data that like is verifiable and can be also correlated with like multiple sources of data. So that's our challenge about like supplying products that are like fitting the demand side. You know, it's like this stage when like you get to a moment in the project development where the due diligence is reaching a stage where like a visit is starting to happen on the stage on the ground. You know, you pass the stage that like is kind of like validating. Then it's kind of like I want to see by myself what is really happening on the ground, where you need this validation that is coming from another source of data that is like verified in situ. And if you have the capability for innovation to make this frictionless, bring as much data as possible, then we're on the right way, and we have positive signals on that. On one of our projects for mangrove reforestation this year, we came up with like a simple audit tool where we could have like a daily reporting from like our 11 partners about like where and how much mangrove we could plant. And on top of that, we could have like one more metric, which is to quantify the amount of like men and women that participated to this activity, that we can also like demonstrate about like the amount of money that has been distributed. And when we show that to the investors, they were like, wow, this is great. And I would say it's really positive because the next question was like, what more can we have? And so like that's where like, you know, it's, you can keep on. Well, they have the appetite definitely to find out like more things, and like we had actually like a novel reporting that was like where the inspector on site could actually like record videos or like photos on site. And yeah, we see like this has been very effective. We showed it also to the VPP, and they were very interested to like help this to back up some of the places that are hard to reach during the visit, so that like they could actually like have a visual proof somehow, maybe with like a medium to high level of confidence that could reinforce like their duty on the project to verify that it was really happening, and that it's not only like using enough observation, it's also like a form of innovation that is really groundbreaking, but also like substantiation by claims that are like activities that can be verified in other ways. So this is like the path where innovation is bridging like this gap of information that we can come up with.
So I can't make this point any better than Rafael just did. Or definitely said. I'll put it slightly differently. There's parts of it, just a bit of a higher altitude. You know, there's certainly a great deal. We won't go back into the regulatory issues, but there's certainly anxiety that President Trump, combined with anti-ESG backlash, will reduce demand. Right, in the absence of legal mandates. You know, there was some side, but I think you can look at this like any other market. If you have a company that makes a product and the company is concerned about demand for its products, there's basically three things that can occur. You can ask sort of legal authorities to mandate the purchase of the product, right? So that's the kind of regulatory demand driver mandate side. Put that off to the side. You can engage in a huge marketing spend. Build hype. People want to buy the product because some influencers said it's exciting, or all their friends are using the product. There's certainly some role for that in the capital markets. Companies, I think, ought to believe that investing in this space is important. Entirely apart from whether it's legally required. But there's a third strategy, and that's just to make a better product. Right, a product that is higher quality, and trust that higher quality will result in increased demand. And so prior to joining the ASPA Foundation, I mentioned I was in government, and in between, I was a practicing lawyer and represented companies on issues like this. And in many instances, some time ago, in many instances, when they didn't invest because, just as I was alluding to, that there's this sort of fear that there's jeopardy to someone's job if downstream something's revealed about the purchase that they didn't expect, and it's just not worth it. That risk isn't worth it. So if we can love to create carbon assets that just lack some of that danger, transparency, and operability. We trust that you can make the pitch to the buy side that these products have high environmental benefits, returns to the climate, and are the whole point of the asset. They're not theoretical; they're real, and we can prove it asset by asset, not just at the Ashmore Foundation. Our approach has more than any other to begin to sort of help catalyze the innovators that are giving you better products. If we succeed, hopefully it all takes care of itself.
There is also like another angle when we start to ideate around this. Innovation is bringing also like benefits to the project side in two ways. From possibly like helping us to originate the project at a faster rate, but also like at a more efficient and cheaper rate. So if we take it from another angle, we could produce the same type of credits at a lower price. That may be like another angle that like it's possible to explore. But like there is also definitely like in terms of like the transactional value, like a way on which in the current market, like OTC, we don't have any way to attach somehow to the price discovery process. This is also something that innovation can help us, like on the project development side, to be attached to these parts that I explained earlier about like not being part of the transaction side of things. That like could be an innovation that could help us to like put in place projects that have like also like a return on investment that is dynamic and not just like only from issuance to retirement direct, but also like being attached on the whole discovery process. There is also like another thing I want to get back to. It's like this definitely change of administration in the US, where companies need to mitigate risk in like different level, and one of them definitely will be also to make sure that like if in the next 4 years, there's maybe a change of administration, we don't want to have like an enterprise that is actually like not prepared for a return to maybe more regulated market aligned with Paris Agreement. And we're definitely going to see like a lot of companies like shutting down any form of like regulation related to climate change, but it would also be unwise for a lot of them to totally like divest this market. So it will be interesting to see in which direction some companies that maybe have some exposure to regulated markets such as Europe or like other parts of the world, such as like maybe like Querétaro and like Mexico and like other places where like the supply chains are affected by their operation, to see which direction maybe like the strictly business side of it will actually make. It's kind of like interesting.
Just very quickly, that is an excellent point. And it isn't unique to the climate context. It depends on the industry, the company, the regulatory environment. But companies stand up the climate apparatus that could take years. These aren't right angle rapid changes. So if there's a concern about this regulatory instability, you're not going to unwind your compliance apparatus altogether on day one, right? The infrastructure will stay in place, and the expenditures may be diminished somewhat, but they'll be certain efforts to ensure that they can switch back.
Perfect. With this, I'd love to open our panel for questions or maybe statements. I know some of the members of our audience also doing project development or any other carbon-related businesses. Or do you guys have any questions or any statements you want to make reflecting on the panel? Whether you're agreeing with the observations that were shared, or you want to add some of your trends and updates, you're free to you share something or ask.
Maybe just reflecting on what Raphael was saying about the need of communities and projects to be digital in the first place. I think you mentioned this as well. Like you may have the best tools and the best mobile application, like maybe the project is simply not ready and the communities you work with are not not ready because I don't know, there may be smallholder farmers that are, you know, not digitized or not connected as well. So maybe just a question: how do you address it in terms of design of the project and getting to that first mile that is maybe not connected at all? So what's the best practices you see there?
So I'll quickly answer as well. So we've been doing an interesting project in Senegal with one of the banks, helping them to assess their sort of say user flow while assessing and then giving the loans to farmers. And so it became obvious, and it was obvious before that good farmers, they're in the first instance they're farmers, and they want to do farming. They don't have much time to understand all these financial carbon their details, but all of them have mobile phones, and so instead of like sending a person filling some papers, because the person filling all these papers takes like a lot of time, and then there's like a traffic jam of papers at a certain point, and then there's a disruption of the protest. A very simple application survey, very chatbot would be potentially a good solution because everyone uses mobile phones, and if this is made really simple, if this doesn't take too much time, then and if there is a certain incentive for that, that's another problem. And this can actually work out. And we, as RCT, we have not been directly working, with this, but we're seeing how the space develops, and we definitely think that this is the future. And the people, the recipients, the communities, they can be their own, MRB providers, so to say, if everything's done right.
One quick comment, from a design point of view, see the design of the projects nowadays are also investors driven. The developers are ready to, kind of comply with any requirement, like whether it is a multilateral development and for a large project. So, going forward, there should be also an enough emphasis from the investor side that, okay, look, I'm investing, but, there should be some criteria of digitalization. There should be maybe not at the first phase, but in the long term, and not even maybe the first year monitoring is not digital, but then there has to be certain portion of the money should be mandated towards kind of digital infrastructure development or leveraging the existing infrastructure. So that way, slowly, I think even if some projects which are not digital in the very beginning can slowly transition over the period of its crediting period or something. I think that makes sense, and that's if the investors will have the kind of the power to drive.
Your question is very good because it takes into account like something that like we have to take into consideration, which is digital divide. If you go back in project development before, like smartphone penetration in many places in the global south, you have to take into consideration something that already still exists, which is alphabetization. How do you make someone sign a free prior informed consent document when he cannot read it? So this is the same thing that like can be there like sectors of exclusion, and this is like where definitely like the opportunity that is brought of having like a computer on the phone is amazing, and we can see like definitely like a lot of like potential with it. But we have to keep in consideration some individuals that may not have the capacity to do it, and also another part that is like affecting the level of confidence of the data you receive. Because like even if there is only one smartphone in the village, and this village that like maybe like 12 people that are like reporting through it, how do you know that these people are not influenced to actually like give like a tailored set of answers? You can build all kind of like security systems to make sure that data translates like well, but their source of entry they are not like done in a freeway. This is where like sometimes in many discussions we have on the technological side, we have to put ourselves in shoes that are not hours. And we also find somehow that we come up from a 100% digital approach, where like we still need to work like a lot on the hybrid ways. And somehow the level of confidence that we get from data will never reach 100%. Even you get the sensor, it can still be rigged in like a way that we have to take in consideration. I'm all for it, but like it's some of the safeguards that we got like even when we work in the DMLT working group with gold standards that like were raised at point of like attention, not blockers, but like point on which like we need to take this in consideration in order to go forward. So I think it's really important to make sure that like it can be as inclusive as possible when we reach to the communities that also we put questions in a way that can be digested. But to get back to one of the first points you made toward AI, also we see an incredible opportunity there. We've seen projects in India, for instance, that could like reach out to communities that were speaking in like I think 42 dialects. Yeah, I mean like it's something that like the same way that like AI now is like a speaking agent. That like if we have the opportunity to record a video with someone in their original dialect, that this can be transcribed and can be part of like the stakeholder engagement. Yes, we're going to be like overthrown with data, but like in a way, if we can treat this data, that is a very positive point for us. It's, to get back to the point I had originally about presenting a set of data to an investor, and they're asking for more, we can deliver a lot, but like in the same way, it's like also like it's not because it's inscribed in the blockchain that it's like suddenly like made of gold. So this is where like we need to keep like also like a reflection system. But definitely data is a key to unlock a lot of good things that are happening in the project to highlight some of the shortcomings that we need to address. So this is like something that we're really looking forward to.
So thank you, everyone, our great audience, our esteemed speakers. I think that was a very professional, expert, insightful session. Yeah, I learned a lot from you. So I hope it was useful. We have a recording that will be shared with those who cannot be here in the Blue Zone today. So with this, I'm closing the Finance and Carbon Markets Day at the Digital Innovation Pavilion. Thank you so much, and all the best with your projects and your efforts, because I think we're going the right direction, and we'll be there soon. Thank you.